All right, one of the things that I want to just maybe start out by explaining is I'm actually going to take you through a real business model that we are currently doing right now. And the success that we're having with it should hopefully be illustrative to you of the success that you can have with it as well. And what APS is, it stands for Accountant Partnering System, but it is a strategic aggregation. So that's the business model behind it. And we're doing something really incredible. We're taking a business whose real value is not in the money it makes. Because if you look at a CPA firm, it makes a good living for its partners, but it doesn't create wealth for them. It just creates a good flow of income. And so what we're going to do is we're going to turn that CPA firm into a wealth creation machine. And we're going to do it by leveraging its most important asset, which is its credibility. Everybody has CPA firm. You don't get any more credible than that. Okay? And their client relationship. If you look at the strength of the organization, what's its most valuable asset? It's its relationship with its client. It's the fact that its clients come to them with every major decision they're going to make to ask their opinion. And their yes or their no can make or break any deal. If any of you have ever had to do business with a business where they had to get the accountant's outlook on it, you know that accountant can shut you down in 10 seconds if they say, no, I don't like this. And the sad part is the accountant's natural inclination is to say no, because if they say yes and it doesn't work out well, the client will blame them, right? On the other hand, if it works out well, it's the client will take all the credit because they're the ones who did it. So it's a no-win game for the accountant to say yes. If they say no, then they can never really be wrong, because if the client doesn't do it, who knows if it would have been a good thing to do or not. Now, the reason I'm pointing this out is there are certain strategic relationships in business. And as an astute entrepreneur, you want to identify every single element of your environment that can affect the sale of your product, good or bad. And some of them are going to be very powerfully good, and some of them are going to be very powerfully bad. And you're going to want to learn how to mitigate any of the bad ones. The reason we went after CPA firms for this project is because in the B2B business field, owning an accounting firm and having that accounting firm behind you is the holy grail of doing B2B business. Because if the accountant's going to say yes, in fact, if it's brought in by the accountant, it has instant credibility, the client has no resistance to the sale, and you literally grease the path for the entire process. In any business arrangement, if you're going to use something in a business, you want to understand exactly what its core is, what its nature is, how it's going to serve you, and then utilize that in the way that most positively affects your whole business enterprise. So with that, by the way of introduction, now let me take you into what APS is, but more importantly, what is a strategic aggregation, and how does it do all of the things that I just talked about. Let's look a little bit about the world we share today, okay? There are companies like Uber, okay? They are the world's largest taxi company, and they don't own a single taxi cab, okay? There's Facebook, the world's most popular media, and they don't own or create any content. The most valuable retailer has no inventory, and that's Alibaba. And the world's largest accommodation provider owns no real estate, okay? This hotel is part of a chain that used to be one of the biggest lodging companies in the world, and it still is. But in a few years, and I'm talking about a very few years, these companies have surpassed all of their counterparts. They're not very old. None of them is more than, I think, 10 years old. Okay, if it is, it's slightly more than 10 years, but the point is it's new companies that have embraced new models, new business models, that have very quickly taken over, but they all have something in common. Every single one of those companies has something in common, and that's that when they went into business, they didn't go into business in the traditional sense of owning stuff. See, in reality, ownership is overrated. If you own it, you have to maintain control of it. You have to manage it. You have to be responsible for its maintenance. You have to worry about if the economy dips. You have all this fixed overhead now that you've got to support all that fixed overhead. So you've got the cycles of business that you have to sustain yourself through. You have no flexibility of good environment versus bad environment. You're stuck with what you got, okay? These models all enjoy one thing in common. That isn't true for them. And so let me give you an example, and I'll add Amazon into this in a moment. If you take Uber, and if you take Airbnb. Let's start with Uber. What are they? They are nothing more than a technology-facilitated platform, period. They provide tools so that people who own their own car, that people who own their own phone, can take those assets and earn money from them. That's all they do, okay? Now, this is how they do it. It's pretty sophisticated, but that's the reality of it. So what they did is they divested themselves of any need to own these assets. People already own them. They already have them. And let me ask you a question. That car that picks you up from Uber, who owns that? The driver. Okay, who runs it? The driver. Who maintains it? The driver. Okay, that car is going to be better maintained, better cared for. That person is going to take better care of you than somebody who's paid a wage to go out and do it. It's just going to work that way. So they're going to get a better quality of service to you. They've removed from themselves the burden of having to go out and fund the purchase of all of these assets. And if you look even at the models that have been before them that were revolutionary, you take models like FedEx. How many people think that the FedEx truck that brings you your package belongs to FedEx? It's all concessioned out. Everything they do is concessioned out. They're a platform. They organized all of these other parties to do what they needed to have done, and it's their capital investment that made it all possible. They just provided the platform that made it easy for everybody to do all this stuff. So when you start to think about your business and you start to think about what your function is in your business, step back a minute. Step back a minute and say, how can I collaborate with everybody that already has what I want? And how can my business simply make it better for them to do what they do in alignment that'll help them make more money? When I just get a share of that, I'm making more money than I could if I owned all that stuff. Okay? A little different mindset, right? It's not quite thinking of business the same way. And so that's what I want to bring to you today, is a new way of thinking about how do you structure your business? What kind of business model are you going to use to optimize the amount of cash that it produces for you, and in turn the amount of good you can do in the world? Because when it comes right down to it, you can have the best idea in the world. You can have the most generous product in the world, the most generous service in the world. But if you can't monetize it, and if it can't make a nice profit, it will not survive. This world will not allow that. Because the world is based on the fact that every single person is encased in a body that says, I have to survive. And if I can't earn my living, if I can't make money on my money, if I can't do those things, then I'm not drawn to it at the level that you want people drawn to your business. So you have to take stock of what the planet really is composed of, and then move to how do we move the forces and people that are within the environment to do that. So what I'm going to be introducing you to today is what I call an ecosystem. In other words, if we aren't satisfied with the way the world out there works, let's create a new world that has its own ecosystem that totally feeds and nourishes itself. And within itself, it has the ability to accomplish and do anything. Anything. All right, does everybody have a fix for this? Airbnb, okay, lodging company in the world, don't own a single, but what do? They have a technology-enabled platform that takes people who own condominiums, homes, and whatever, and when they're not using them, gives them the opportunity to make money by having somebody else stay there. Simple as that. They don't have to own anything, they just have to facilitate it. Their system is automated, and it takes a little chunk of the revenue for themselves, and the rest of it goes to the homeowner whose property was used for the day or whatever by those folks. And the technology today is, and I put this in quotation marks, is so cheap relative to the way we had to do things in the past, when we had to have things where we had to supply the brick and mortar and the machinery and the equipment. Okay, it's so cheap relative to that you can put together extraordinary business models that empower other people, make those people really happy about how they're able to use their resources, and at the same time solve social problems, at the same time solve everything that you're inclined to want to solve. So that's what we're going to try and bring you through today. The world today belongs to the disruptor. If your business isn't a disruptive business, then it's just a part of the crowd, and it's going to be competing for resources just like every other business is out there. And in a world receding in natural resources, which is part of why we're all here today, people increasingly embrace the idea of collaboration, a collaborative economy. Intelligence sharing extends our productive capabilities. It's about how we leverage information and communication technology. It's about how we create and optimize relationships. So we're going to talk to you today about strategic aggregation, so it behooves me to make sure that there's a clear idea in your mind of what is strategic aggregation. Exactly what is it, okay? It's bringing together businesses that serve a common clientele organized around a common marketing theme, and that's the essence of it. In other words, when I think of a business that's serving common clientele, let me tell you, we have a strategic aggregation that we're doing. It's called Billionaire Lifestyles. All right, Billionaire Lifestyles. And the common client are wealthy, high-income earning people, okay? So that's the common marketplace, the common clientele. And we construct a marketing theme that enables every one of those clients' companies to be aggregated around an entity that will facilitate better ways for people of wealth to spend their money, get more for their dollar, have more enjoyment from their dollar, have more control over their dollar, so that any enterprise that can help a wealthy person succeed better and make better use of their money, have better, whatever it is, okay, any company that can do that is aggregated around that. And we aggregate those companies around a family office. Why a family office? How many people are familiar with family offices and what they do, okay? Those of you who are not, let me explain it real quickly. Wealthy people find money a burden. They do. What do you do with it? How do I manage it? How do I maintain my family governance? I want to maintain a governance of my family, but I'm a very wealthy person. I know everybody's waiting for me to die, right? So I got to have some way of making sure everybody's cool with me while I'm alive, and how the wealth of the family is going to be worked and distributed in such a way that everybody's happy here. I need to have something that handles my charity investments. I need to have my charity contributions. I need to have something that helps me when I buy my yacht. This is something that's going to be registered in a foreign country because of the labor laws, and it's got to be the right place, and the insurance laws. It's got to be harbored. You're in the shipping business, you own a yacht. So it's got a lot of challenges to it. I have to have an organization that handles that for me, otherwise it becomes a bigger burden to own this thing than it is to park myself on it in the Mediterranean and use it, okay? So all those things have to be handled for me, and a family office is set up to make sure every tax thing, every financial security thing, every personal security thing that I need, everything that I need as a wealthy person is handled for me and managed properly. Inside that family office, we embed a strategic aggregation. We embed something that you're going to see how it works in a CPA firm. I'm not going to get into it in detail because I'm going to do it in detail in a CPA firm so that you can see exactly how this works. But the point is, and I want to give you a clue as to why I'm going into this, okay? Because I think that'll help you to see, as I go through it, why this matters to you. Because sometimes you can see stuff that looks great, but what's in it for me, right? Why am I looking at this? What's it going to do for me? And the answer is, you're going to learn something about back-end revenue. Back-end revenue. And why is that an important item? Many of you are undertaking socially conscious projects where on the front end, there isn't any way for you to make a lot of money. In fact, that's why your project is so hard to get off the ground or get it going, is because it doesn't monetize well for anybody. It's maybe not efficient. You're depending on government subsidies, and they're not sufficient to really make a real difference. So what we're going to teach you is how to take your business that is nominally monetizable, can't be monetized much more, but monetize it on the back end by creating an aggregation around your business that shares revenue built around the networking they get from you. So they're making money because of you, and they're sharing that back with you. So now your core is monetized, not because of what it does in its main business, but because of what it does to organize all the other businesses around this great service or this great work that you're providing. So instead of thinking of your business as, I have to make the money here, I'm suffering now because I don't have enough money in my business coming in the way of income, stop thinking of it has to come from your business. Your business can become the core of a strategic aggregation that takes people that are aligned with you, that can benefit from you, that will do more business because they're aligned with you, and organize them in a way so that you can share in the revenue now that's being produced by them. Taking that on top of the revenue that you have in your business now makes your socially good enterprise a very profitable business as well as something good for the environment. So I'm asking you to make this mind leap from how you normally see your business to how it could be reorganized in such a way where it's like a cash flow machine. So now you're not only solving problems, but you got all this money coming in to do more good stuff with, okay? So that's what I want you to see in what I'm going to show you. And I'm going to show you how we take a CPA firm, which, as I said, makes a good income for the partners, but that's all, doesn't create wealth for them. And we're going to create that CPA firm into a wealth creation machine based on the fact that it has relationships and it has credibility that enable us to organize around it a number of other successful businesses that revenue share with each other, including that CPA firm, creating an unbelievable flow of money to the CPA firm that they don't have to do any work for, that now enables the CPA firm to build wealth for its owners, or in this case, its partners. Okay? So as long as you've got that orientation, I think this will make sense to you. Okay, so we have the common marketing theme, okay, and we provide, and that theme is, that group is provided with a method of revenue sharing between the source of the customer and the business providing the service or product. And I'm going to show you exactly how that works in a moment. Organized and coordinated to best serve the customer's wants and need. The one thing you never ever forget in business is the customer is king, okay? If your product or service doesn't meet the customer's needs, doesn't do it better than somebody else's, your business will not survive. It has to do that. All right, so we're going to start out with an accounting firm. And that, you'll notice, we put it in the center of our icon here for strategic aggregation. And now we're going to start to organize some businesses that their clients need around that business. Their clients need access to private equity. Their clients need access to mergers and acquisition with it so that they can grow through or when the owner's ready to retire, it can be sold. Okay, accounting firm itself has a human resources problem, hiring new qualified people, but so do all of their clients. Their clients also have financial planning issues and process optimization challenges, and they need marketing services. So you can start to see now the number of different things that feed off of the clientele of an accounting firm. These folks are doing business whether the accounting firm brings them in or not. They're going out trying to do this. And I got to tell you, it's a jungle out there. Okay? If you're in business and you have to hire a marketing service, who do you go to? How do you know who's good out there and who's not? How do you know who can really do a good job for you? Who's the authority that will help you find the right marketing firm for you? Who do you believe in that you know you can go to and trust who will bring you into a top caliber company? The answer is nobody. and you got to do trial and error, and you go through 3 or 4 different firms before you finally find one that's good. That's a terrible way to do business. What you want to do is you want to be part of an ecosystem that's already gone through that screening process, and when they bring in a marketing service, it's the best. It's going to get the job done for you. It's producing results for all the members of that ecosystem, or it wouldn't stay there. In other words, this ecosystem is a self-policing system that only allows the best to participate in it, okay? So now, once you're part of that ecosystem, you're covered. And that's the whole idea here, is where do you go for an authenticated solution to your problem that you don't have to now go through this big trial and error process. Now, obviously, if we are starting to build a number of services around this accounting firm, we have a problem, okay? And we call it an problem. How do we orchestrate the capabilities of our service partners, and I'm going to start filling more of the blanks in a moment, with the needs of our client? Because it's one thing to say we're all part of an ecosystem. It's another thing to say that the ecosystem has this time-tested, proven way of making sure we get the right support, that we get the right resources in the right order to help us build our business. So that's going to bring a little bit of a challenge into this, and so we're going to combine a couple more entities in here for a legal firm. But I'm going to introduce you to a new term. It's called a certified business strategist. In order to make strategic work, we had to invent a new person, okay? This person, this function doesn't exist anywhere on planet Earth right now other than in a strategic aggregation. And they have to be trained, and we create an avatar of who's got the perfect background to be trained for this, and then we recruit them, we train them, and now they're in a whole new profession. And they got a job. Their job is to make sure that the clients of not just the accounting firm, but the clients of all of these firms are all going to get cross-marketed to the right firm to do what's needed for them. And that's going to be their job. And I'm going to show you a little bit about how we train them, what we do, so you know that this, I want to take as much of the mystery out of this as I can. We're going to equip that person with some tools, because in order to do that job, they're going to need some tools. And one of the tools they're going to need is called an RMA Annual Statement Studies. Okay, anybody here ever hear of RMA Annual Statement Studies? Okay, new term for everybody. You're going to love it. Okay, one person over here who knows what it is. There's a company called RMA. It currently stands for Risk Management Associates. And what their job is, they have as their members all the banks in the United States. And every time a bank brings in a business client that's looking for a loan, what do they get from that client? Financial statements, right? Okay, everybody has to give their bank their financial statements if they want to borrow money. The bank, as a member of RMA, is compelled to take that financial statement, take the name off of it, tell it what the SIC code is, or the NAICS code of that industry. Does everybody know what SIC codes are and NAICS codes are? Okay, the government standardized, this is in the US and most other countries follow it, they standardize every type of business there is that operates in their country. And they broke them up into categories, and then those categories into subcategories, and then they assigned these SIC code or NAICS codes to that particular company. So now, by a SIC code, the taxing authorities know what kind of business that is, the government knows what kind of business that is, the banks know what kind of business that is, and all those businesses can now be put in a group. So we now know a lot about that category of business. And if we want to do any research on that category of business, if we know the SIC code, it cuts our research time down by a fraction, because we just keep putting that NICS code in there and asking our questions. And now we're getting them much more specific than general answers. We're getting them pertaining to that code. All right, we now have that SIC code. And the banks submit the form, the statement, to RMA with the SIC code, or NICS code. And what RMA does is they run a statistical analysis of every business that ever submits a loan request to a bank. It has their financial statements, and it now can produce, for any given industry, a benchmark of what the ratios are from those financial statements. What's the average in this industry of this company's asset to sales ratio? What's the debt to equity ratio? What is the quick ratio? What is the ratio average in this business? Now, why is that important? It's important to a lender, because if you walk into the bank and you hand him a financial statement from your company and he sees what industry you're in, and your financial statement is off the charts bad for what somebody's standard is in your industry, you're going to have a real problem getting that bank loan, okay? And you haven't even told the banker anything about your company yet, and he can look at that and he knows he doesn't want to loan money to you just from that, okay? So everything else he's going to say from then on is no, and you don't know why, okay? But it's real important that you get friendly with these numbers, because they are going to play a role in how you have to develop out your business. Why am I telling you this? Okay, we order out an RMA Annual Statement Studies in order to equip our CBS, our Certified Business Strategist, with a tool. And here's how he's going to use that tool. We have the CPA firm's records, because now we own the CPA firm. That's why we want to own this core business. So on that business, without even telling the owner, once their financial statements are ready for the year, in other words, they were produced, now they're ready to be delivered to the owner, our CBS makes a call to the owner. And the CBS says something like, "Hello, John, I'm Harry over here at the CPA firm. Your financial statements have been prepared for the year. We'd like you to come into the office next Wednesday. We want to review them with you, and we want to show you how you compare to your competitors." Okay? So now, nobody turns down that interview. Nobody, because they want to know what their numbers are. We're going to explain their numbers in a way that no one's ever explained them to them before. They're really going to know what they mean about their business. And they're now going to know what their competitors' numbers are, which they're dying to know. And we're going to show them how they can make their business better than their competitors. So that's a tool that enables our CBS to make a call to a client that's going to make that client thrilled to come into the CPA firm to learn this stuff. Now, when that happens, we have a little piece of proprietary software that we made up, which compares the client's financial statements to the standards, tells them all the places that they're as good or better, but also shows the places that they're worse, that is making them non-competitive. And then the next thing that CBS is going to do is he's going to say to them, "John, it says that over here you're clearly in the amount of money you spend on marketing are way under what your competitors are spending. So we suspect you don't have a good source of marketing. We'd like to introduce you to a company that can really help do this and take you out of this challenge that you're having." So now the owner knows what's wrong with his business. He has somebody who's authoritative telling him what the solution is. And now he's thinking, well, maybe I ought to do this, when up until 10 minutes before that, he wasn't even thinking about that. Okay? And any other area of his business that we're weak, maybe he's not spending enough money on HR. You look at his payroll relative to the payroll of his competitors. Okay? And you see his payroll is much lower. You might think that's a good thing, but it also may say he has no good executives in the company too. Okay? Because he doesn't have any high-paid talent in the company that helps helping him solve his problems. In other words, a well-trained person can ferret out through those systems what's probably wrong with the business, and we provide them with software that helps them do that. All right, now, we come back, and the thing that the owner's likely to say to us is, "All these folks, you're introducing us to this person, I'm sure that's all going to be very expensive, and we don't have the money." Isn't that what you're always going to hear? We think, yeah, we love the solution, we just don't have the money. So we tell the client, you don't have to worry about that, because any dollar we ever ask you to spend, will come from money we already put in your checking account. So every dollar you're going to spend for any solution we bring you, you will never have to write a dime that we didn't give you, a check for a dime that we didn't give you. The first question is, how are you going to do that, right? Nobody's ever done that for anybody before, right? And so we say, we have a program called Bigger Bank Balance, okay? And here's how it works. We have 40 services that work with us in our ecosystem that the day after you give me the permission to do this are going to come into your business and find every place that money is hidden in your business, every expense that you're incurring that doesn't have to be incurred, everything that you have tied up in this business that's not being 100% at least productive. And we're going to show you how to convert that into cash. And in fact, we will guarantee you that within 3 to 6 months from the day you say yes, we will put somewhere between 7 and 10% of your gross annual income. You'll have that much money sitting in a bank account in cash in your company, okay, that you didn't have before. And every check you write us will be out of that. That's a pretty dynamic statement. And then the question is, how are we going to do that? Being business experts, we know where all the money's hidden that most people don't. Let me give you an example, just so, again, I don't like to just make blanket statements without providing you with some substantive evidence. Let's say this is a manufacturing company. It owns its building. Or it's a big distributing company. It owns its building. Big investment in the building. If you're Walmart, you own so many buildings that you have a department that knows how to do what I'm going to tell you, okay? They will literally negotiate with every assessor in every town they go into, and they will get the tax rate of that building down to a much lower rate than anybody else does because they know how to do it. The average person has no clue how to do that. So they just sit there paying these higher tax rates. And so in most states, in the United States, we can go back 3 years. So once we prove to the assessor that they shouldn't be taxing this at this amount of money, they're overtaxing it, we can go back 3 years and collect all those overpayments. So between not only having payments lower going forward, but taking the payments that have been made back over the last 3 years, there's going to be a big chunk of money from that, put in now a special bank account that we set up to pay for their future growth through our services. So when the checks get made, they get made out of that account. Then we go and we look at their payroll. Again, unless you're a big company, you don't have the payroll experts who know how to minimize your payroll taxes, your Social Security, well, that's pretty fixed, but your workers' compensation. There's thousands of different categories of businesses under workers' comp. Depending on which one you're in, depends upon your rate, okay? Depending upon your past history of people getting injured, it determines your rate. But there are so many factors that the average person knows nothing about that when you get a professional in there, they can find money in there like crazy that's been overpaid, reduce your payments for the future. So at the same time we're plugging leaks in the boat for the future, we're also creating chunks of money that we can go back and create from the past. So when we're done with this bigger bank balance process, the company has a big chunk of money sitting in its account, and it's a lot more profitable going forward. Okay, now, I'm going to take a little diversion here. If you have that service, who would be one of the likeliest candidates for wanting to have their clients go through that service? The accountant would, but even more, how about a bank? Okay, if I have a bank, I have what's called a watch list. Okay, when you sign that loan at the bank, they ask you to sign this loan form and all these agreements, and they have covenants in them. Never mind you missing a payment. You're not allowed to go below a certain ratio of your debt to your cash balances. Okay, they have ratios in there you can't violate. And the minute you violate those ratios, they can foreclose on the loan. See, they don't want to wait until you have not made a payment because it may be too late then to collect their money. So they want to be able to collect the money while you're still semi-healthy. Okay, so they have these ratios in there that help them do that. So the watch list is when any of their accounts are getting close to violating one of those. And the bank doesn't want you to violate them. They don't, because then it puts them into this bad process of having to go get their money. They don't want that. They want you to have the money, and they want to just make their interest and principal payments back. Once we align with a bank, they call us in. They call us in to all of their accounts that are on their watch list so that we can raise a big chunk of money, get them off the watch list, but more importantly even, plug the holes that are causing them to struggle and have these ratios in conflict. All right, now, if we're putting together a strategic aggregation, what do you think a bank is going to want to be? Are they going to want to be in this ecosystem? Yeah, okay. So we look for everybody's pain point in a business. That's a B2B. And what's their pain point? How does our ecosystem solve their pain point? And it makes them want to be a player. But now, if we have a revenue sharing mechanism, they're going to want to be even more, because watch what happens now. In our system, we have a way of compensating anyone who brings in a client. If the bank brings in the client, they get what we call the source tag. That's their client. Now, anywhere in our ecosystem that client is spending money, a portion of that's going back to the bank because they're the source of the client. Okay? Now, with enough referrals, the tail wags the dog. The source of back-end revenue, which is pure profit, they don't put out an ounce of work for it. It's pure profit. It drops right to their bottom line. They're eventually making more profit from the back-end revenue that they're getting through the system than they did through their primary core business. Now, the reason, again, remember I'm sharing this with you, is because when you start to think strategic aggregation is how do you put your business in the center of all this, so that as all this revenue sharing is going on from companies that are benefiting from their affiliation with you, you're sharing in that revenue with all that revenue coming back into your company. All right, let me continue the illustration. So not only is the bank getting more clients from the system because our CPA firm and all the other strategic partners, our CBS, remember that their job is to make sure that everybody gets to the right provider. So they're getting clients coming in where they're getting new clients. Yes, they're sharing some of their revenue back into the system, but it's worth it. They have marketing expenses just like everybody else, right? Okay, they're happy to pay out some money to get new accounts. So they're thriving from new accounts. They're thriving from getting people off their watch list. They're thriving because they have more revenue coming in from the clients of theirs that are matriculating through the system than they would have had just as a standalone bank. So they're benefiting in every possible way. Okay, so we put it through our proprietary software. So we have a dashboard that makes it work really well for everybody. So there's our commercial bank. We have investment bankers, education and training groups, performance, so that all of the things a company needs in its IT. Just think of what a benefit that is to the client base of the CPA firm and everybody else for that example. Has anybody tried to automate any part of their business? Everybody ever try? Did you have fun? It's a nightmare, right? Because you're dealing with a lot of people. You don't even speak their language. You don't know who the good guys are out there. What better than to have them come through your CPA firm that will not mess with you because they don't want to lose you as a client. Anybody that's going to come in through that door from them, it's going to be somebody good because they will not take the chance of losing you as a client. Okay? The important thing is to build out this ecosystem of top producers, of people who will not disappoint the clients. So real estate, mortgage banking, you can see that around the CPA firm, for the benefit of those clients, the list is almost endless. Now, simple math. If you have two companies that cross-market with each other, you can almost double their exposure to clients, right? If you have three companies that you cross-market, it multiplies by 3. If you have 4, it multiplies by 4. At some point, the multiplication breaks down because as you get big enough, you start to run into commonality of clients, right? And the system does not work with 100% efficiency. No system does. But if you've got 100 different services, every one of those aggregated partners of ours now has access to 100 times their normal client base to produce their services. And it's all with the most prime recommendation or the most prime introduction that you can possibly get. The prestige is built around the CPA firm and the fact that you've built around that CPA firm a group of top providing businesses that no matter who's serving that client is going to get the best of services. And you've structured it so that they never write a check except for the money we already gave them. So for the entrepreneur who's a client of any of these people, it's an irresistible proposition. We found a way to just make it irresistible to everybody that we work with. And when we bring in any new party, we already know their pain point. When I say party, strategic partner, we already know their pain point, what their problems are in their business, and how our ecosystem solves their problems in addition to more clients and more back-end revenue, okay? So all of those things are built into the system. Now, I could probably spend hours here with you to get into this in depth.